All right.
Thank y'all.
Thank you. Eloquent in his brevity.
All right, I can't really see over there across that. All right.
Frank is at the site of the NOLA no call against the Vikings, I think. Remember the NOLA no call? I think that looks like the NFC Championship game background.
All right.
I don't know. I was being very specific. I could be wrong. Oh, right into business, huh?
Let's go.
All right, y'all. You know, everybody wants us to freestyle. We've been getting some feedback that we should just give, that we should go through some numbers, but freestyle a little bit more because people enjoy the insights. So we thought on the second to last meeting of 2024, which this is, believe it or not, because Wednesday is New Year's Day. The last Wednesday of the month is New Year's Day. The second to last is Christmas Day. And we'll do meetings almost any time, but those are two no-goes. So next week will be our annual Christmas meeting where we could have a visit from Santa Claus.
And it's a Santa Claus that we've never had before.
Right, it's a surprise. It's going to be fun. Only one Santa Claus. Lana was Santa Claus one year. Mrs. Claus. We're gender neutral clauses here. And then
I was going to say, I think she's a specific gender.
Yeah, I think that remembering the costume now, it was very gender specific. David was last year.
It was pretty I know you're trying to be PC, but actually it was pretty gender specific.
I don't even remember.
I do.
I do.
Don't even remember.
Okay. So let's roll on. So
that you don't remember.
we pulled a lot of numbers together for you. Y'all, something's happening. And I really want you to take this one to heart and maybe get remember this. I don't know about you all, but I am getting a lot of calls. There's a lot of showings. There's deals happening, and with very quick timelines. LOIs, weird things happening right now for the end of the year. And you know who they are? Investors. Investors are buying houses. Investors are buying commercial buildings. Investors are making investments. And are they doing it for full price? Not even close. Okay? Now, what I find incredibly interesting about that is we've had a problem. If you go pull in Matrix, no, you don't have to actually do it, what the average number of showings to closings are, it's like 2.5, 3 showings to get to a contract, to get to a closing. These are super low numbers. We've highlighted this number before.
There were like 10 back in COVID.
Yeah. Well, no, pre-COVID. Not during COVID, but pre-COVID. Okay? So I think what happened is a ton of buyers got just burned by what they experienced during COVID. And they said, if this guy wants $700,000 for this house, that is overpriced in my view. I'm not even going to go look at it. Even if I think it's worth $620 or maybe or $600, I'm not even going to go look. And therefore, we have listings that are sitting and getting stale, and clients, and because our clients aren't listening to us and selling us to lower the price. So what's happened? Things have gotten stale. Investors are saying, you know what? I'm not afflicted by that same, dare I say, wrong point of view. And I'm going to go take advantage of opportunity because the end of the year is a mental thing, and even more, there's tax reasons and expiring tax provisions that make this year a great time to deploy capital. And I'll tell you one of the big things there is the 60% bonus depreciation that goes back down to significantly less next year. The other thing is no matter where you felt politically, it seems like all these investors felt like the way that the election happened or the results of the election meant that risk is on and the economy is open. And I was just in my personal meeting with Antonio Carbone from the JP Morgan Private Bank yesterday, and they're saying the soft landing is over. It's done. We're now in a new economic cycle. Okay? So soft landing done, new cycle of growth happening.
So no potential of recession.
All clear. Alarms gone down. We're going to lower interest rates 3 times. One of the times is next week.
Do you think they will do it next week?
According to the Fed tracker that we show, 87% odds of it happening next week.
Okay.
I said the same thing. My challenge is why would we lower interest rates when economic data is coming in strong?
That was what I was thinking.
Hiring numbers are pretty good. We're not getting bad data out of the Bureau of Labor Statistics or any government agency. And Antonio's answer to me, and he's going to come present this in the beginning of January, is that they are still technically in emergency territory to slow the economy down, and they want to get out of that and be in a much more neutral state, and that's going to take at least three rate cuts of 25 basis points or more. So, thank you. One person gets it. That is a good thing for everyone in this room.
No, and your comment about like the politics of it, I mean, regardless of any of your politics, it's just after a presidential cycle, you always see appreciation. You always see appreciation and growth in that next year. And whatever it is emotionally or how you feel or their stability or all the things, everyone just feels different. Yeah. And they feel like they now have 4 years to make financial decisions.
The investment sentiment is risk on.
Yep.
Place big bets, get big returns is the
And what I would say to the people in this room is, you guys need to be buyers. And you should maybe focus on, say, 3 properties, go look at them, try to figure out who's the most motivated, and send in the lowball offers and see what kind of negotiation happens. This is your opportunity, too. These are the markets that you guys need to buy in. Don't just take care of your clients. Take care of yourselves, too, because you'd like to be sitting in my vacation seat sometime in the future when you get to be my age.
Mic drop. Wow, I love that.
Gary said years ago, and he said it multiple times, but he said, I never imagined that license in your pocket, the only way you're going to make money from it is from buying and selling, from helping others buy and sell property. That license has taught you with other people's money how to do it. Now go find it for yourself.
Yeah, and I meet people over and over again who sell 10 million, 15 million, 20 million, and they don't own any real estate. And my jaw drops. I'm like, what?
Right.
How is that even possible?
I think we were in the same meeting. It was one of the wealth community meetings, and it was a common theme that they're like, we all have an unfair advantage. I mean, you may not feel fully like you're an expert at everything. Well, you're living this every day. Guess what? If you're in Matrix all the time, you're an expert, right?
Yeah.
Or if you're just meeting with people. I mean, some people are saying, I just want to get this darn rental off my books this year. How can I do that? And if you've got $50,000 in cash in your bank account or some cash, I don't even think it's got to be a big number. Why wouldn't you ask them, well, would you be open to an owner financing deal? And what if it was me? Like, this actually fits the profile of something I'd like to own. I think I can manage it and fix. They told you all the reasons they don't like it. They gave you, it's an open book test, right? They told you all the problems. If you think you have the know-how, which I hope you do by now, you've been able to do we pay an inordinate amount of insurance so you can do property management for other people. Like, you can property manage your own stuff. You can get your own leases. You've got the advantages. So if you're not going to do it yourself, get clients to do it. And when somebody says, yeah, I'd owner finance it, how much money would you need in cash to make it work? Well, okay. You send an email out to your clients.
They probably are like, you tell me. And you're like, well, I would pay you this.
You need 2 more deals this year. I guarantee you can go get them. And you can get them under contract.
And we beat this a little bit, but like some of the best agents in the office are sending me houses or properties that they want to invest in, right? And they don't invest in 95% of what they send me. But I guarantee you they're able to turn around and find somebody that is, because they believe in the investment.
That's right.
And maybe you don't have that much cash, and maybe you go find 2 other people that do. And you do it as a group. And it's a lot better to own, a little bit of a grape than 0.
Yeah. What's your short list is the way I used to look at it.
0, yeah.
Yep.
0 of a watermelon.
I had a question about the state of...
Yep.
Yeah.
So,
Philip and Lana.
I just wanted to say, the reason I immediately clapped right then was... So the interest rate cuts, from what I've been understanding, is like when we have an interest rate cut, so the money's going to be like that doesn't necessitate that mortgage interest rates are going to go lower. That might necessitate that mortgage interest rates are going to go higher, right? Like, isn't that a risk that we're seeing with this?
You said two things. Correct. Dropping the Fed funds rate does not mean that mortgage rates fall. Okay? The 10-year is its own thing. And in the last week and a half, we've seen the 10-year go from 4.4% to 4.1%, and I'm not sure what we are to this morning. But, John, in your career of 20 years as a loan guy, have you ever seen the 10-year move like this?
There have been moments.
But not sustained volatility periods. There were
Now, we've had the foreign market has been the norm over 20 years. There's been occasional interesting moments like now.
Yeah, but usually we're in some terrible part of to see volatility like this and movements like this, usually there's something wrong with the economy. It's 2008, it's 9/11, it's some big problem. We don't have a big problem, but we're seeing the volatility. So that's an issue. That's another whole issue that we could get really nerdy about. I would just tell you that consumer sentiment is so vital here, right? The average consumer spends about, I think it's $6,700 a year on gas. Yet gas prices, when people are surveyed, if gas prices are low, they will tell you that the whole economy is great. And if gas prices are high, everything's in the crapper. Over a $6,700 a year purchase, where there's far more volatile things in their portfolio. I mean, if tariffs go wrong, we're all going to pay a whole lot more for every basic good like toilet paper, and the less money you have, the bigger impact that is on you, because that's a bigger percent of your spending budget. So people's heads are usually screwed up on their priorities, and I would just say that the Fed lowering rates and the stock market, people hearing stock market reaches all-time highs again, which, Ken, correct me, I think that's exactly where we are, right at all-time highs ever in the history of the world. Then I think that's all really good for sentiment and makes people want to buy a house.
The reason that I didn't clap, the cuts are expected not to go below 6 again, right, for the end of 2025. So it's not huge.
You mean it's not going to trigger mortgage rates to fall below 6?
Below 6, correct.
Yeah.
Isn't that the expectation?
I would expect. Okay, here we go, team. Crystal ball time.
I'm not done.
Trading range, and John, let's let you share yours. Where do we think in 2025 mortgage rates are going to be? I think they're going to be pretty steady.
Yeah.
And I think it's going to be kind of a 6.25%, 6.5% range. Maybe even times of the year where you could get 5, 5.8, 7.5, somewhere in there on the odd month. But
That's correct.
is that kind of what you feel?
Yeah, I believe
in here?
Fannie Mae and Freddie Mac are both estimating rates to be, for the most part,
nobody can hear him.
sixes.
Where's the second mic? Okay, so John said high 5s, low 6s, right? According to Freddie Mac and Fannie Mae.
Which is phenomenal over a long period of time, but for our buyers right now, they can't.
They can't process.
They can't process that.
Well, they got to process it.
They have to,
They
right?
have to process it. In my mind, looking anywhere 90 days out is a crystal ball.
Yeah.
I feel like I'm wrong every time, so I mean I can throw some garbage at you, I guess. And
Yeah.
I would,
It's super hard to predict.
But you kind of have to operate in the next 90 for the most part,
Yeah.
and that's how I would truly talk to a client, because we're routinely wrong about it. I think understanding the math of, well, if we wanted to refinance, this would be the cost to do it, or the savings. I mean, there's good ways to word that, but it is what it is.
My other ping that went off is did we recess at all?
Sure.
Okay.
Yeah,
So
unemployment's almost down to 2. It's not at 2, but we're We're in strike. The Fed says we're in striking distance of it. They feel like we're.
No.
Oh no, we never had.
We didn't. We didn't.
Well, okay, we had sector-based recessions, but by the technical definition of recession, which is 2 quarters in a row of negative GDP growth, right?
Yeah.
Then we did not have that.
So when you say we had our soft landing, like, no, we really didn't. We just had a soft. Right? Like.
Well, no. What we were trying to.
I don't feel like the
true
economy,
recession, and
like.
we did, and that's
Yeah.
why it's called a soft landing.
But there's another thing. The Fed got rid of the Fed balance sheet. Okay, so the Fed bought tons of bonds to prop up the economy during COVID. The Fed balance sheet grew to, I think, $9 trillion. And they have sold off or run off, reduced their balance sheet by $2 trillion. And the bond market hasn't had a issue at all. So there's been a $2 trillion runoff on the size of the Fed's balance sheet, the largest balance sheet in the world, basically. And no one's complaining, no bond defaults. Auctions happen every couple days in the bond market, and they do just fine. They've been anemic a couple times, but they've never been like, David Muir on the news saying China shorted bonds today, or U.S. bonds, and caused a tumult.
Expect, but that's
no, I mean, this has never been done before. You've never seen $2 trillion.
And you were like, this is going to happen, and it's going to affect us, but it didn't affect us.
Look,
right?
Jerome Powell has, I think you can say he's landed the plane.
Yeah.
He has
A sector-based recession is what we have been going through. I think it would be completely unfair to say we just did not have some sort of recession. We all.
Our sector.
We did.
We took it on the chin.
But we're all. Yeah, we're not the only ones, and we've just seen a lot of wacky ups and downs, and a lot of sectors, weird sectors that even make any sense, right?
Yeah. Hit the button. So there you go. There's unemployment. Let's go through a couple. There's a slide I want to get to. I want to get to the home sales.
Well, do we want to you want to go forward and back, or?
Yeah, we're popcorn this thing. Keep going. 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 We'll come back. This will be so fun. Keep going. Keep going. Keep going. Keep going. Keep going. There we go. That's what. If you want to know what feels like shit, it's right there. It's 3.9 million homes that are going to sell this year. Less than last year, by the way.
So that's the worst since 1995.
Well,
2009.
2000.
So after the last recession, right?
Yeah, maybe 95.
Yeah.
So here's what I would tell you, though. You didn't feel this. You felt this last year. When I pull up zip codes and areas in New Orleans, we're actually doing better than we were. We're selling more units than we were last year in most neighborhoods and most zip codes.
Well, and I
So
think it's
the rest of the country caught up to us. We feel it first. Insurance, all the problems.
And what do you care about the most?
Money and money.
GCI.
You care about commission, and I think there's a slide in here that's volume, but the volume is still up, right?
Hit it. It's probably next. No. Home prices. There you go. Yeah, even those have come down, but we're still above trend.
Yeah.
There's another problem we've got. The stock market this year is up 24%. The S&P 500, a broad market index, is up 24%. Now, in some ways, we compete with stocks. If somebody's going to invest $1, where are they going to invest it? Stocks, bonds, real estate. I mean, those are some of the cash. Okay, that is a real competitor we have, and I think instead of trying to hide that from clients that are investors, I think you talk about how incredible it is for there to be a year of 24% price appreciation, and the year before that was 22 in the S&P 500. How many more years do you think we can put those kinds of numbers up? Is it time to ring the register a little bit and take some of the house money that you won and go buy a piece of property, which is incredible inflation protection in the event that we have some inflation protection?
Well, here's a fun question.
The stock market doesn't just go up 20% every year. It just doesn't
Why
happen.
invest in a home over stocks?
Well, because you need somewhere to live, okay? Homes were never supposed to be investments.
Yeah,
We can thank NAR for making them investments, for having the best economic situation in the world where people want to buy land. But the big reason why you buy real estate as an investment is because you can leverage it.
There you go.
Okay? To go get $1 million of investment deployed in stocks, you need $1 million of cash. To go buy $1 million home, you need $200,000, maybe $250,000.
Give or take, yeah.
Okay? Maybe even 9%, maybe even 10%.
I think even less.
Okay?
Yeah.
You can do better deals.
Go find a better.
Maybe. So that's the pretty slick thing. And then so to buy, from an investment standpoint, which is why a home's not an investment because you're paying yourself there, or you're paying the bank. If you were to buy a double for $1 million, you need $250,000, and then your note is covered by the people paying the rent. So you make very little profit, but the debt service is being paid down by others.
And you have other incentives like depreciation and things that are just set up in your favor.
Huge tax.
So let's do some math on this, right? Let's have fun with it. So we have $100,000 of stocks, right? That's how much money you have, and you're going to put it in the stock market. Average, of course, of all time is approximately.
It's usually 7 or 8. It's usually 7, 8.
It's higher now. Let's say 10%, right?
Okay.
10%. So how much money did we make this year?
$110,000.
Yeah.
You made 10,000, but your market value, yeah.
Yep.
Got it.
Let's pretend like you have a good loan product for a second and say it's just a 10% down, right?
Okay.
How can I buy $1 million house, right?
You can buy, okay, sure.
Why don't you buy a $500,000 house and be realistic about the $100,000 that you're putting in?
Yeah, that's a good number too.
Right. Why don't we do something that's really comparable?
Okay. I'll show you.
If you're buying.
I'll show you later how I did it. Twice.
But those are the ones you're living in, right?
What?
Are you talking about the ones you're living in?
Sure.
Well, we're not talking about that. We're talking about investments.
I think for a lot of people in this room, we're talking about the one you live in.
Okay. Then you can do it for
500,000. Go ahead.
All right.
I wasn't interrupting you, just for the record. It was others.
It was me.
Annual appreciation.
4%.
That's. I mean.
I think we're at 3 right now, right?
So over the course of time, I think it's 4%, right? 3 to 4% is like what we've done over the course of all time.
4% is the number,
right?
That everybody.
4% of that number, not what you put into it, right? So I'm gonna do the math for me. 4% of 500,000.
$20,000.
Thank you.
2,000.
Huh?
I need another zero.
20,000.
Thank you.
That's your appreciation. I mean, because you're leveraging the money that you didn't have, because people are lending off of that asset, right? I mean, that's conservative, good numbers, right? We're not saying like the stock market had a terrible year, and we're not saying that we just went through 12.5% for a couple of years, right?
Yeah.
Right.
I mean, this is the reason you leverage debt.
And this is why, if anyone ever says the stock market was up 24% and real estate only goes up 4%, you say, well, you're forgetting about the leverage component on it.
Well,
It's kind of a big one.
We were also talking earlier this morning about companies that do services, and I told Jeffrey, I'm like, I would never touch a company that doesn't have an asset, right?
Yeah.
Like that property is a real piece of property, and even in the downturn of the last recession, was a quick recovery.
Yeah.
Like you just needed to hold on for a couple of years, right?
Yep.
The land.
Yeah.
You gotta own the land.
Your CEO can get, blasted for sex harassment and your stock price is going to die.
You can also get murdered.
Yeah, right? But you can't do that with that home. I tell people like that.
Well, there's a lot of. I mean, you could do index funds. You can do mutual
I'm
funds.
not trying to make a joke. I feel bad for the guy.
Yeah.
Okay.
I don't know if you know, but it has become a little bit.
It's become a little bit of a what?
Sadly.
I really can't stand health insurance companies, but that's somebody's son, father, brother. Okay. Cody, you want us to talk about the soft landing? Here's the slide on inflation. It's pretty good there. That's why people are comfortable saying
It's over.
mission accomplished.
Did we get a banner?
I think we should pull out the remember the where.
Heck of a job.
100%. But don't let the tail wag the dog, because when the country's healthy, we do just fine.
Yeah. No, and Antonio said that, right? Like, we're going to be the first ones to get the pain. We're going to be the first ones to get the benefit.
Well, we were the first ones to get the pleasure during COVID. That's for sure. Remember being out Good Friday in masks and booties showing properties in 2020? Like, I'll write that contract with a mask on. Who cares? I didn't care about masks. I was just whatever it took to write the purchase agreement.
But right, like to our core, when this all happened, we knew it happened because of COVID, right? And we kind of knew it was going to fix itself fairly quickly. I mean, it's been a pretty shitty couple of years, don't get me wrong, but it's fairly quickly for what this huge spike in inflation is. I mean, go talk to a number of countries around this planet that just didn't do that well.
Yeah.
Quick is better, correct?
Oh, yeah.
We get through it.
Yep, absolutely. I mean, we would have loved to just go from 7 to 2, but that was pretty damn quick.
Yeah.
Hurt a lot.
We haven't really seen that filter down to even the grocery store, at least.
So
You're not going to.
So when you think about inflation,
Milk's not coming down.
It would have to be.
It's coming down.
Eggs aren't going down.
It would have to be negative,
Why do we
right?
keep talking about eggs?
So let's talk.
Because my house goes through a dozen eggs
They're
every.
not expensive.
My house goes through a dozen eggs every 3 days.
Let's talk. Let's just.
They're not.
If it was $1 one year and we had 7% inflation, it now costs $1.07. If we had 2% the next year, doesn't mean it goes backwards. It's still going to go up. Your prices at the grocery store are not going down. Sorry to break the news to you.
So why don't we have that talk about insurance then?
All right. Well, Tim Temple is coming here in January. We're going to have a big event with the insurance commissioner.
Yeah, that still remains our big.
We're going to take him to task. Can't wait for that. I'm going to start preparing now. Yep, we haven't even rolled it out. I think we're ready to. We're probably ready to start talking about it.
We are now.
Surprise! Cody, if I go back to the first sales meeting you ever, when you first came on as team leader, we talked about geopolitics.
Yep.
And I think our geopolitical situation is incredibly interesting. Lana, you want to talk about what risk we have out there? And is the plane landed? Let's talk about what happened this weekend. Bashar al-Assad is gone, and we've been trying to do that for how many? I mean, that's over a decade in the making. Why did he have to leave? Well, he called Russia, and Russia said, "I'm a little bit busy with this Ukraine thing where we're losing 1,500 people a day." Right? That's about the number?
Yep.
He called Iran, and Iran said, "Actually, the West has me by the hair right now, and I really don't have a lot of choices." He called friends in Turkey. He called friends around, and they all said, in Belarus, and they all said, "We're kind of busy with the U.S. and the
Just to emphasize
issues
how
we've got
nuts
with
this is, right? So I was working the watch floor over in Europe.
Wait,
I remember the first
the watch. You were on the watch.
military watch floor, like we watch, intelligence.
No, explain that a little bit more. You keep using these broad terms.
No, it's
That's
just
only what you're allowed to say.
yeah.
No space lasers are going to hit the building if you say a couple
it was
things.
part of like Sixth Fleet, which is everything that pretty much happens in Africa, Europe, Eastern Atlantic, all the way to the Black Sea, down in Levant, which is Israel, and all those fun countries. And so, the huge activity at those moments was missiles flying across the border into Syria and all that activity. And that was where we started talking about what is that red line in Syria. That was Obama, right? We crossed the red line where Assad basically did, chemical weapons against his people. That was like, if we wanted somebody out at a point, and we flexed every muscle in our kind of State Department mind, not military mind, we certainly did. And he had a stronghold, and he was able to stay against all desires.
And Obama got a lot of crud for that.
Yeah, and so the fact this many years later, effectively, you would have said he
we
almost
chipped
recovered.
away, right? We chipped away. The State Department built coalitions. We used other conflicts in our favor.
Yep.
And now we've got some serious changes that have been happening, and really, they're all pro-Western interest. Am I wrong about that?
Well, I don't know about the rebels taking over Syria as our interest per se, but yeah, I mean,
Better than Bashar al-Assad?
I don't know what the next card that we play is. I mean, I'm not
but
living that every day, but
I guess my point is we've gotten rid of somebody who was supported by North Korea, China.
But in a sense, we'll take a stable country that's even not in our favor versus a destable one that's run by,
I would argue
because then we tend to get involved. With,
I would argue that we broke up the big fighting force that was, or the big force that was operating as a bloc, and they're all busy with their own conflict.
Sure.
Okay, so now we've been doing that. That's been happening for the last decade.
Positive distraction, basically.
Exactly. They're all kind of working on their own problems. That by the way, we're kind of we're maybe not instigating, but we're definitely helping cause problems, so that it goes in our favor. And we're going to have a new foreign policy regime come in. I mean, that's what the new administration said. So I look at geopolitical risk as a reason why the stock market could fall, interest rates could be affected, and you could see some big things. There's definitely room out there for geopolitical risk.
Yeah, not to get too in the weeds on this, but the headline not to miss is Russia losing its ports inside of the Mediterranean, right? So Latakia and just their physical presence inside the country. All of a sudden, why we had a good presence in Iraq for so long, right? In Syria.
Okay, so they lost their ports. Okay, gotcha.
Yep. And so, some people would one reason we support Israel so much, we love a base right there, right? Why do we still keep such a presence even in Iraq today? We love a base and a presence right there, right? Russia just lost its one piece to play in the Middle East in an easy kind of way.
Yeah. Because they're busy with Ukraine.
Well, they can't.
Yeah, they can't stretch themselves in another theater. This rebel force.
The question is,
TBD.
From Cindy, is what do we think is going to happen to Russia? 3 years ago, we would have been wildly wrong about the ability and force of the Russians, right? And we would have kept them in our top concerns. I mean, that's where I spent a lot of my intel training was against, the Russians. And we've seen what they've been able to deliver to the Ukrainians to not be as formidable as we would have thought. And seeing them having a kind of a tough time brokering good agreements with others is unbelievably positive. I mean, you would think at some point there'd just be a little bit of let's just stabilize what we got. Tons of headlines in the last couple of days, again, about currency in that country, which is eventually going to or is
take it on the chin.
They're taking it on the chin. Do I think that causes a collapse? So I think no. I mean, it depends how they.
Russia's
going,
collapsing every 10 years anyway.
They got to all to stand back on stuff.
Well, they do, and remember one of the things
that's what's keeping them afloat.
One of the things that lowering during the Obama administration that really hurt Russia as they were trying to flex their muscles on us was oil prices fell and their economy fell with it, and their ability to have military spending fell drastically, and they had less options. So look, all this to kind of bring this all around, because I'm not trying to get too far from center here, but to bring that back around to real estate, there's a lot of good things happening, and I know in the fog of war, which I feel like no matter what side you were on for the election, you felt like you were in some kind of war in your head, listening to sides or whatever the feelings were around it. And I'm not trying to downplay those, but I would say at the same time, do not let that stop you from talking to your clients, your spouse, your whomever about making an investment decision that sets you up for the next decade, 2 decades of your life. It is a great time to buy. Okay? What's dragging you down? What's dragging your clients down? They're consumer credit. Consumer credit and worried about the wrong things. So let's turn off the news and let's turn on.
It's easy to get distracted right now.
Oh, absolutely.
Bigger than ever just because it comes at you from all angles. So.
I think the conversation's a little bit like this, right? Where it's what is getting you down? What is that objection, right? And I'll tell you, if I was on the other side, I'd be like, insurance, right? That's what I hear the most. Okay, and so all right, well let's walk through what those numbers could look like for insurance, right? Mm-hmm. And say my price point is $500,000, and you would tell me insurance would be approximately
$10,000.
It's in the
That's not a lie.
It-
That's what it is.
And so,
With your,
in those scenarios, are there other properties that we can find such a still on? That the equity, maybe you already get immediately, that you'd be comfortable? Like, what does that cash flow look like for you? But the fact, like, at closing, you could feel confident that you're going to walk away with an incredible deal, right? This house was worth $600,000, and we just got it for $475,000.
right.
Shooting 525 would be a deal.
Those deals have been out there.
They're out there right now.
Yeah.
Or-
People are begging you to just get this out of their mind space this year. I promise. I'm here. I'm getting the calls. I'm hearing about it. You're calling me with the contract question, and I'm like, what the heck just happened? Like, you're thinking about it like a contract thing, and I'm looking at the numbers going, whoa.
And if you're working with a client and you just hit this problem that just seems like you can't like solve, I mean, have that conversation with us, right? It's like we can go on all sorts of rabbit trails, like of assumable and all these other things. But there's a lot of tools. You just got to figure out what the person's mental mind block is and how can we overcome it.
Yep,
Yeah.
I agree.
And that's also part of the things with when you're out there looking at properties. There's a lot of motivated people out there, and you just have to figure out how to get to them.
You got to be in the market. You got to be talking to people. We've got to be talking to people.
It's a great time to go after expired listings and cancel
Yeah.
listings.
What I keep hearing from David is like, there is a market of the moment. You got to take advantage of it. Like, you got to understand what's great about the current market. You can say it's a terrible market, but it's actually a great market for buyers.
So, Lana, there's your slide. I was wrong. There were 2 months.
That's where you want to be.
Lana, I was wrong. There was 2 months, 2 quarters in a row of negative GDP growth, but 0.6 followed by growth that they didn't really. I forgot about that, John.
It was so minor, right?
It was. It barely even counted.
It was not
Barely even counted. Well, it was a fast recession. Okay, let's bring this in for a landing.
Soft landing or?
How about a pleasurable landing? Cody, I was watching my trainer working out the other day. He looks very different than me working out. And he said,
That's how you work out? You watch your trainer work out?
yeah. That's what I do the other 6 days of the week.
I have so many comments.
Is it working?
I cannot.
No.
I'll pass.
So here's what Mark said. Y'all have met Mark. He's been here. We haven't had him back because he said the F word a few too many times for a family show. Right? You remember? Cody, here's what he said in his video.
I didn't even notice that.
He said, don't wait till January, start now. That hit me. So if we're starting now, we're not waiting till January. Let's answer that. What's the thing you start today?
I think what's really hit me is Philip really pushed on kind of forget about some of the big goals, which at first I was like, I can't digest that at all. And then he started talking about Atomic Habit, and I think there's a book club happening, or next week it's starting, right? Promo, here you go.
Next week?
But it's
We're going to order it on Amazon next week?
it is like truly what can you do every day that is going to make you money, not just get you smarter, the activity that makes you money, that you do every single day as a habit, regardless of how you feel and what like results you're getting. You got to believe in it for a hot minute. Mm-hmm. And if you're in it for a good period of time and it's not getting you results, then come talk to us. But that's almost never the case. Once you get in that habit and routine, you start seeing good business out of it.
So would you say that's maybe focusing on the 20%?
Yeah, absolutely.
Yeah, we could. So if we come to this meeting every week and we find it fun, that's entertainment.
That's right.
But we didn't all do this to be on the news or entertainers. We did this.
Education without implementation is just entertainment, right? And so it's like, I think a lot of times we come here and like, this is all interesting, and you don't share this, you don't use it, you don't post about it, you don't make phone calls about it, and you just, maybe you're smarter, but without some sort of prospecting, you're not going to get business.
Yeah. I don't want to be like,
Let's not say process.
this isn't the 4th hour of today, everybody. That's what we're trying to tell you.
You gotta talk to
I ain't
David
hodocopy.
would tell me I can't say the word prospecting.
Oh, I love
in
it.
front of a group.
I was making fun, but you gotta talk to people.
I said it just for you, Dave.
All right, MJ, your wisdom.
I'm getting better.
What would we start now? What should we start now?
Yeah, I mean, I like to focus on being investors, and I think all of you guys need to make sure that's your plan of action. And if you guys need help, come to me. I'll talk to you about it. And now's the time. Don't wait till the new year. There is so many motivated sellers out there, and like they said,
So if you're going to focus on investors, what if you had a short list of 3 properties you had in
That's
your
it.
pocket, and anytime you literally take the piece of paper out and you're like, oh, I've been waiting to tell somebody about 123 Main Street. This is the best one that I find in
I don't
Matrix.
tell them. I tell myself. But seriously, there's some people who just aren't going to sell because they don't want to drop their price. Next, but there are motivated people. I mean, some people literally write it into the description, and then what I do is I say, well, what is their motivation? Is it price? Is it timing? Is it a quick? Do we need a quick deal here, or what is the whole thing? Because they all have different motivation, and if it's price, that's your ticket. You're looking for that person who needs the price motivation. And don't be afraid to make offers. Put the low ball offer out there. This is the market to do it. You want to see how they react.
Well, you gotta look at the other side of the coin.
Yep.
The other side of the coin is there's a lot of agents that don't know what the hell they're doing, right? And they don't advise their clients on they don't know what the job, okay? So what they've done is they've overpriced they've allowed the seller to sell them on a price that's way higher than it'll ever sell for. And the agent doesn't have the nice Jewish term of the chutzpah, right, to get up there and tell them what the price needs to be to sell it. So you got to catch 22 there. So that's a perfect example. Bam, but then at least you brought them something. Or they say, we'll just bring an offer. Well, fine, here's your low ball offer, which I agree, because I think that's our biggest problem is that in the market you're in, why we're seeing so many expired listings is because either they're not going to have the conversation with the seller, right, or the seller's too dumb to see the writing on the wall. Yeah. One or the other, and make the adjustment and not take the appreciation this year and get it sold.
Times you are dependent on that agent, but there's a lot of solid agents out there that can explain the issues
it's true.
And get you the deal. So, it's going to be a combination of finding the right motivated seller and the right agent that can tell your story to get it done. So just, don't give up. Keep on pushing forward.
It's the hustle on the other side. I think, there's just a lot of, I'm a little pessimist, a lot of bad agents out there that haven't figured out their motivation. To David's point, just listed high. But reach out, like pull those strings and make them give you answers. Just assume you're right with what you think the price should be.
Ask the good questions.
And go at it.
Go back to motivation.
How many offers have you had?
I used to think like putting in low ball offers was a waste of my time. I'm just saying, like I'd protect my time, and I'm like.
Well, it is in a hot market, but it's not right.
Even in the last market, I mean.
There were things that worked.
$1 million property we ended up getting for $600,000, and I would have advised my client all day not to do it, and I really thought he was wasting my time.
He showed you, didn't he?
He showed me, and it has changed the way I do it. I'm like, okay, if we get it, this is great. Like I'm here for it,
And he probably picked up $300,000 of appreciation immediately.
And do you know how many times?
What's that? Yeah, just opened a shop on Barone. You should go see it, right by the Virgin Hotel. It's pretty cool.
So, all right, to kind of wrap all you want to say something?
The last thing is just, do you know how many times I've been following a property that it was like, that's just more than I want to pay. And then I see it sold, and I see the number that it sold for, and I'm like, I would have paid that much. So, just, you gotta play.
On the commercial stuff, $1 million less on commercial stuff all the time.
Yeah,
especially on commercial stuff.
Had one of those this year.
Yep.
Here's the 2 words I'm going to leave you with. Re-educate and influence. Re-educate your clients and use your influence to get them to see that we are in a new day, a new paradigm, a new place when it comes to buying real estate right now. The COVID playbook is over. I don't know what I'll do for you if you go on social media and make a really good video explaining that if you're playing by the old COVID rules, like you're playing with the old game.
You're dated.
Yeah, you're dated. because realtors have not moved on, buyers have not moved on, sellers have not moved on. And it's gone. It was really easy to move from the pre-COVID paradigm to the COVID paradigm. All you had to do was keep raising your prices and learn how to work a price war. That didn't take any skills. Wow. What takes skills, what takes education and influence is teaching how we have to go back to the times where you got to get the price right and you got to, pay attention to people's motivation to get it sold. It's a who? So re-educate and influence. Those are the words I would say.